Hi, good morning, Michael. Thanks as every time for your kindness and attention to us. First of all, if I may begin, I want to thanks everybody for joining with us and try to indicate this opportunity that we think could be really interesting. Which is my role? I am the chairman of the Société Privée d'Investissement, is a Luxembourg holding, investment holding that take care about private equity and real estate investment. It has been founded in 1999 by a private family office that I represent. The family office is Switzerland based and a Luxembourg company. It used to be used to have participation in industrial participation in Italy, in Spain, and banking sector participation in Switzerland. As of today, is mainly focused on real estate activity, and we hold real estate assets in Italy, as we are showing to you, these and other assets, and in Switzerland, and we have sold some times ago assets in Spain. I'm happy to present to you and to let the floor to Mr. Leone Recchi, that is the director of Kroll, a very well-known international appraisal company, and is our advisor in this disposal process, and have done all the appraisal. And I leave the floor now to Mr. Recchi.
Thank you very much, Sergio. Hi, everyone. Few words about Kroll company in general, and then we step in the presentation of the opportunity. As you may know, Kroll, former Duff and Phelps, is the world premier provider of service and digital product related to valuation, governance, risk, and transparency. We assist clients all over across diverse sectors, including the area of valuation, investigation, cybersecurity, corporate finance, and legal and business solution. We are spread over 30 countries around the world and with nearly 5,000 professionals. My team in special, it covers the Italian market. We are called Kroll Transaction Service and are an independent company specialized in the real estate and consulting brokerage. We are present in Italy, in Milan, Rome, and other secondary cities with professional specialized in technical, financial, and commercial trading for and cover all the supply chain of a real estate investment, from the analysis, origination until the disposal. Going today, we're gonna go through this opportunity. We were instructed as an exclusive advisor from ICRE SRL, which is the vehicle of Société Privée d'Investissement, and we are delighted to present to you the possibility to acquire a partially developed and already urbanized land plot in the lovely Umbrian region, in the heart of the Italian peninsula. The property consists of about 970,000 square feet, situated in a century old natural park, and and already includes 19 residential apartments ready, completed, and ready to be sold, finished with a high standing quality, and three existing buildings that could be redeveloped for a total of approximately buildable area of 70,000 square foot. The landlord has already built up 81 garage and parking spaces and a wellness and a swimming pool area. Regarding the location, you are maybe familiar with Rome, Milan, Florence. Here, Perugia is less well known, but it's exactly in the city, in the center of Italy, as you can see from the map. Um, we are actually in a very famous area, famous for his landscape, famous for the mountain, famous for the hills and the valley. We consider it as a kind of new Tuscany, because it offered more or less the same cultural things. In this case, it's Perugia. It's very central, as I said, and it's very good linked to Florence and Rome. So for U.S. investor or tourism, it's easy to reach it because you can land in Rome or in Florence, and then only 85 miles distance and 1.5 hour by car, and you're gonna reach the location. The subject area is located just a few minutes from distance from, as you can see from the slide, from very interesting amenities such as the golf course, a small airport, schools, church, bank, and market. None of the less, as I said, is very near to Siena, very by only 1 hour car drive. Florence and Rome as well, 1.5 hour. So the location is exactly well distributed, let's say, and it offers also amenities in the area that could easily reach by tourists and of course visitors. Let's go in deep in the property. Let's talk about the development. From this map, you're able to see the land plot. The development was thought be a strong environmental value because it's exactly inside a old natural park, and it was originally property of a family of a conte Enea Silvio Piccolomini, which became pope, and it became famous also to create in Pienza the first ideal city of the Renaissance period. Perugia 2, which is the name of the development, is, as I said, is approximately 970,000 square feet land, and is divided between four blocks. From the map, you're able to see Block A, Block B, Block C, and Block D, which are the real estate blocks. E, G, F, and G are the service blocks. The building A is the one who is already built and redeveloped by a specialized team who has maintained the historical conservation. I will show you a few pictures that could give you the look and feel of the property. This is actually it's a must-have for the area because it's very unique, and it maintain what was behind the concept of the original landlord. The property, here we have some other pictures. The rest of the building, as I said, is divided between three blocks, which could be redeveloped. And the analysis that we did as an advisor was a high and best use analysis. It means that we've tried to maximize and increase the value of the property to achieve with a different living mixed use, and to achieve the highest value for our client. And at the end of the analysis, the results was to keep the residential block as is, and try to sell it on the free market as a fraction sale process. while the other development will be service apartment. We call it service apartment, but in the US, you are more familiar with apart hotel, let's say a branded apartment, so a short-term rent, and a senior housing, another block for senior housing. This mix is very, we think it's very could be very let's say work together because of several reasons, and it's also allowed by the current urban planning of the area. In fact, the area is actually right now in an area where it allows you already to build up a senior living and a hospitality block without any other permission from the municipality. And to note is that the landlord has already paid primary urbanization charges and administrative charges. It means that the next buyer just need to present a project for the remaining buildable square foot, and pay the secondary urbanization charges. Here, I will come back to this slide later. Here, you're able to see very, very brief our assumptions. The assumptions were based, of course, on market of Perugia and of a comparable set. What is important to note is that there is still something constructed, and it's ready to be sold. This amount of 19 apartments could easily, according to the market price, reach approximately 8 million on the today's market. So you have an already embedded value to start with. The business plan done by us was based on a 7-year business plan, and we were able to split, let's say, the sale of the first 19 apartments in 4 years' time. During those 4 years, the next buyer, of course, will start thinking about either to start with a short-term apartment to rent or with the senior living. At year 7, you will have the exit of the two these buildings with a value that could a gross development value which could easily reach 38 million. The costs, hard and soft cost estimated by the team is in the range of 14 million, and the asking price for entering now is in the range of 12 million, which means to a high IRR, mid double digit high IRR, 15 plus, more or less. Our assumption, as I said, were based on the market that we have investigated, and we were actually pretty confident. We have before starting marketing the units, we have involved high standing luxury real estate agent to the disposal, and everyone was very firm and convinced that our underwriting was very prudent. Here you are able to see a comp set that was analyzed with a price euro per square feet of 260 euros. Going quickly back to why we are here today, and why we believe that this investment is a unique opportunity for investor in your market, in the US market. Quickly, and then I pass by Sergio, but the points are very clear. Unique location. We are talking about a unique location in the heart of Italy, and with a huge potential increase because, as I said before, Umbria is non a well-known and inflationated region. Therefore, the prices are still acceptable in compared to Tuscany, which offers the same landscape, the same product in terms of quality, wine. We have excellent wine. We have excellent product to offer, but it's completely. We say we could achieve a discount of 30 to 40% for real estate. Second point is the flexibility that this development offers. Urban planning permission are already granted. The next buyer could easily decide what to do, where to invest, when to invest as well, because you could start from selling what's already built and then decide to do the senior living block or the short-term rent block, or carry on keeping residential block, or let's say in the best scenario, if you're happy with what you achieve, also your personal villa, you are free to decide what to do. The market trend is very interesting. As I said, the region is very it's very increasing. The market is increasing and has a very good macroeconomical data, which are improving a lot. Tourism is coming to the Umbrian region. We are facing in the last year an increase in tourism. We are facing foreign tourism as well, not only local tourism. And last but not least, the financial rationale behind an opportunity currently that offers the chance to sell, to have something real in your hand. So a development opportunity that has already something built is something that could hedge the development risk. And then the rest of square meter that could be developed could be linked to the environmental friendly panel, let's say, and could easily be attractive for the region. Nonetheless, I leave the word to Sergio to quickly touch the macro economical points that we believe could be a plus for a US investor.
Thanks, Leone. Absolutely. Thanks for your presentation. Very, very clear, straightforward. First of all, the reason why the investment holding is trying to dispose this asset is the fact that one of the two brother that was taking care about this Italian real estate investment used to have, unfortunately, some health problem, and its son will not be able to take care about this. So that we dispose, we could be interested to remain in partially in the investment. We don't want to dispose at all, but basically we are unhappy to not able to take care. And I will tell you and will detail more the reason why. First of all, by an US investor point of view, you have a very compelling entry point due to the cross rate. Obviously, the euro dollar is below parity, is 0.97, 0.98, is the lowest level in 20 years. So that it implies a discount of 18, 20%. Second argument, the rates, the European rates are far less lower respect to the US. As discussed in the previous presentation, the US 30-year mortgage, the reference rates for real estate, is running 6.8, 6.9, around 7%. And the similar rate in Europe is the 20, 30 year is 2.3, 2.5%. And even hypothesizing an increasing in this path may not go over 3.5% due to the fact that a very indebtedness country in Europe cannot afford this type of increasing in rates. And European Central Bank knows particularly this argument and will not push too much through. And this is crucial for the achieving better IRR because the debt will be offered at 3.5%, 4% less than US. That is crucial in order to attain higher IRR. The third argument is about the fact that you have already built a surface sold at a very low prices because this region offer a discount by the respect to Tuscany, discount of 30 to 40%, as I was told. And we are talking about a very interesting prices, even respect to the Italian one, and internationally wise, respect to US home prices, the European market and especially Italian real estate have not grown so dramatically in terms of price. And this, in my mind, represent a floor to the downside risk to the prices. So that prices have not risen dramatically during the past during the past 5 to 10 years. So it's a compelling opportunity from our side. We cannot exploit due to the internal situation, but we think we could help with this, and a very qualified appraisal can confirm the valuation that we have not built only internally. We had already, but we have a mandate, a very well recognized appraiser. But now I left again to Leone in order to finish and begin the Q&A session eventually.
Yeah, thank you, Sergio. Yeah, I mean, we still have few minutes for some Q&A. I will add just that, as I said, we are the advisor, and we are more than happy to organize and to plan if you are interested, looking more at the detail of the analysis of the investment, to organize a one-to-one session. I mean, I'm pretty sure Michael will share with you guys our contact details, and we can easily organize a call to investigate further. I don't know if you have some question. Michael?
Michael?
Yes. Hi. All right. So, how are you handling the FX risk to U.S. investors?
I can reply on this. The FX investor, the FX risk, first of all, could be hedged, as everybody knows, because once you can fix the rate, so that exists financial opportunity, financial operation in order to fix the rate. So that if you buy at parity, you can fix through financial operation. So that is something that you can fix. And basically, you can even fix the interest rates because you can discuss with the lender in order to fix, I don't know, a 10, 20-year mortgage. And right now that the rates, as I told, are quite absolutely lower respect to US. So that the FX risk and the interest rate risk, as of now, could be hedged, and I don't feel that an institutional investor like we used to be may easily navigate this risk. Absolutely.
So, yesterday you talked about the differential in mortgage rates between Italy and the U.S. Do you mind touching upon that a little bit?
Oh yes, in Italy, the as I told, we are discussing for other property a 10-year mortgage rate at 2.5 basic rates plus 125 basis point spread. So we are talking about 3.7, 3.8% finish. That is, I could say, even considering this spread, this huge spread asked by lender is far more than half than the rates in US. So that this is something that we have the relationship with bank. Because we, as I told you in the presentation, we execute other real estate investment, and we have already we have contact and we are in touch with main lender in Italy in order to introduce this type of rates to the potential investor. Absolutely.
All right, gentlemen. I appreciate your time coming on today, and I look forward to having you back on our program soon here during the Art Basel edition. And
Thank you.
it's a pleasure, Sergio. Pleasure working with you, Leone. Thank you for your presentation. I will be following up with more information on how to get a hold of more details on this opportunity, and a copy of the presentation.